this might sound kind of crazy, but I could do about 80% of my underwriting in under 5 minutes on any project. Just because I know what it costs, I know what the city will allow, zoning, all of it. And so I can just go, okay, this isn't going to work at all, or hey, I think this might be a good deal, and let's take the next step to unearn our due diligence.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
All right, welcome back, everybody, to another episode of Spur Equity's Spur Your Wealth podcast. I am your host today, Param Singh from Spur Equity. On the Spur Your Wealth podcast, we aim to bring successful investors and experts and thought leaders on our podcast to share their story and secrets in investing so we can all stand to benefit from their experience. And once in a while, we like to bring on folks that are doing something very unique, very different, just to show that there are many, many different avenues to be successful in investing in real estate. So we're really excited today. On our episode, we have Marcelo Valdez. Marcelo is a former US Marine. He's a veteran and a former business development executive. So after a decade-long career in the corporate world as a business development leader, Marcelo began a new career as a real estate investor and general contractor. Marcelo realized that the best deals in real estate were found off the market. And so he began specializing in direct-to-seller marketing to find his acquisitions. His company, Next Wave Homebuyers, now specializes in sourcing residential and commercial properties at deep discounts. And his investment company, the Next Wave Group, specializes in building backyard apartments, taking advantage of incentives in San Diego's unique building code. Which is something I'm really excited to learn on today's episode. So Marcelo, welcome to the Spur Your Wealth podcast. Really happy to have you here.
Yeah, thank you so much for having me. And you're right. It's the positive and in some ways the negative of real estate is that there are so many ways to get involved in real estate and to make your way through. So sometimes it's even a challenge because you can get caught by shiny object syndrome.
Exactly.
The most important thing is to focus in on what you think is going to work and, go all in.
Yeah, no, absolutely. And one of the things that we found, and Rav and I, for example, we've went through a lot of different avenues. We started with a single family. We did long-term rentals. We did short-term rentals. We did wholesaling. We did fix and flips, right? And so we went through all of that, and again, a lot of people are successful in all of these different endeavors, but then you quickly find what you like and what you don't like. And so even with multifamily, when we started with that, we started with small multifamily, and quickly realized when we were the property managers and we were getting the calls, we're like, we don't like that. So we got to partner with somebody that loves property management. And so we'll do, we find our strengths and we find what we like, what we don't like. And again, there's so many different ways to be successful. Everyone really has to kind of understand what their time commitment is, what their capital commitment is, what their strengths are, where they excel, where they feel passion. But there's so many different avenues. And so what we like to do on our podcast is bring people like you on that have a unique story and operate in a unique way to shed light on something different, right? Something different that folks are doing. So really happy to have you. So as we kick this off, can you give us a little bit of your story, how you started? What I know you mentioned in a conversation that we had that you bought your first property a while ago, right? And so talk to us about what led you into real estate, how you got started, and what you're doing today.
Yeah. Okay. Well, I'll. You had mentioned I was in the military, was stationed in Camp Pendleton. So when I got here, I decided that I wanted to stay. And so when I got out, I went to graduate school, did a part of it in here in San Diego, University of San Diego, and then a part of it in Monterrey, Mexico. And I'd actually done a kind of an interview. It wasn't super formal, with a company called Qualcomm. You may have heard of it before. I left off to Mexico, and I got back. And to show you how long ago this was, I didn't have any internet on my travels, and it was like a month after I'd sent my last email. An email had come back like 2 days after that. It was like 3 weeks had gone by and said, "Oh, hey, we've got a position like you'd interview for." I was like, "Oh no." So anyway, that all worked out, and I spent, like you said, a decade or more traveling the world. Did some overseas assignments, expat assignments. One in Brazil, one in the UK. Was all great. Came back, but then decided that I wanted to not travel as much and to begin to do more stuff. I'd already been doing real estate on the side and getting into that more and more. And I was, as so many tech people are, and I know you're in biotech, and so these things, they go up and then they go down. And I was caught in a layoff. I was laid off. And so it was actually kind of good timing for me because I was ready. And so I started doing different things related to real estate and investment. I actually built a couple of custom homes in La Jolla. You told me, you'd lived a year in La Jolla.
Yeah.
So think sort of those big custom homes on the big hillsides. I had to do all
By
kinds
George's
of...
on the Cove. I remember that area. Yeah.
Yeah, beautiful. All of it beautiful. And it was a great learning experience, but that was totally not the way I wanted to go. And I was also investing in properties, doing, as you just, your experience with fix and flips and things like that. And then I realized, wow, it's really hard to find good deals that are on market. So I started specializing more and more in off market. And somewhere around, but I've always been fascinated with building. I'm an engineer by background, by education. And I enjoy seeing the fruits of the labor. And the state of California, because we have this real heavy housing crisis. It's really critical right now. And so they started putting in these ADU laws where you're allowed to do one unit and then what they call an accessory dwelling unit. That's what the ADU stands for people who may not be familiar. You can actually build up to 1,200 square feet. So that's a pretty big accessory. People will call them, granny flats, whatever, but these are pretty big structures. And then you're also allowed a junior accessory dwelling unit, which can be up to 500 square feet. And typically the idea was that's attached. Either as a part of the home, you take an interior part of the home, or you convert a garage, right? So you could actually take a single family home and turn it into a triplex. So I was super interested in that. And as the different jurisdictions were working on trying to figure out, hey, how are we going to implement these laws? Some of them were and still are very restrictive. San Diego they had been super restrictive, and they kind of were. But then about 3 years ago or so, they started to really, really make some radical changes. So now what they've said is, and the way the law works is the ADU, it's like a base, right? So you cannot allow, no jurisdiction can allow anything less than what I just described. But they also have no upper limit. So City of San Diego has now said, okay, here's what we're going to do. If you provide one, and this is according to the federal guidelines, one affordable unit, and it can be, there's various levels, very affordable, very low income, moderate income, which is the highest of the categories. If you provide, it can go up to moderate income. We'll deed restrict it, so it has to be moderate income for 15 years, but then we'll allow you to do a bonus market rate unit, and so on and so on and so on. So I've actually got, and that goes for either single family zones or multifamily zones. So for example, we've got a project right now that I will be doing fundraising for. It's a single family home in a single family zone, but we're turned into a 7-unit building.
Wow.
There's another one's a duplex. We're turned into 10 units. So there's no upper limit as long as you do not max out the floor area ratio. So I've got 5 projects going on right now with various partners, and yeah, I'm super excited. It's part of the solution to our housing crisis. It is not the solution. There's no way we're going to ever, meet that housing demand, but at least we can kind of do our small part.
That's great. That's really interesting. So I assume this started, like you said, like what about density? Like, you have a single family home and I assume there's some sort of density requirement in terms of how big the lot is and how many ADUs you can build. So what's the restriction there? And then secondly, my question is from a utility standpoint, is it separated or is it still 1 meter, right? If we're talking about multi-unit on a single family dwelling.
Yeah. So that's why I call them backyard apartments. I mean, people use a lot of people now know what ADU is or what ADUs are. And so the regulation basically encapsulates the laws around ADUs, but I call them backyard apartments because you can look at these things
Yeah.
and some of them, they just look like a 3-story multi-unit building. And yeah, so everything is done. You can just think of them as smaller apartments. And so the utilities work the same as a multi-unit. That is, gas, electric, all of that, just like a small apartment building. So if it's a 10 unit, you've got, 10 separate meters.
Wow, that's really great. So is there a restriction on, I mean, what is it? This is, I assume this is long-term rental. So long-term leases, this is 12 months and beyond. Is there any discussion or restrictions in place for, say, I am doing one ADU in my backyard, right? 1 or 2 units. Is there any restriction for me to be able to do an STR with those?
Yeah.
Because
So
I assume it's part of the, like you're saying, it's part of addressing housing, so it's not really
yeah,
quote unquote hospitality, right?
exactly. So whatever is existing, you can do whatever you want. You can do,
Okay.
short-term rental, medium-term rental on the whatever. If it's a single family, if it's a duplex, whatever. Yeah, you can do that. But you're right. The additional units are they have restrictions, and that is delineated specifically for housing. And
Yeah.
I have a website which is thenextwavegroup.com, and in there I have a guide, and it kind of goes through some of that information. So you could go down a big rabbit hole in terms of the restrictions and how all of that works, but that's kind of the gist of it.
I assume if you're doing something like this with the city and there's a incentive to do that, are there any tax incentives that come into play, property tax or anything like that that they give you a little bit of a reprieve on if you're doing this and taking this on?
I wish. No. But
No.
what they do have is they do waive certain fees. Certain of the permitting fees are actually waived for accessory dwelling units. So that's nice.
Okay.
And the other
Okay.
thing is by state law, you're supposed to do these and permit them. The city is within 2 months. So that's not happening. But they have hired additional people. They've actually hired consultants to come on specifically to accelerate the permitting of the ADU. So my very first one, I think it took, of course, it was over the holidays. It took probably a full 2 months for even it to be submitted. In other words, I submitted it to the city, but for it to go into their system and actually begin review took like a full 2 months. Well, now we're seeing when we submit our plans, we're getting comments back in about 90 days, which is pretty good. So
Okay.
you get the accelerated, permitting, and you also get some breaks for sure on the permitting cost from the city.
Okay.
Yeah.
That's great. Now, are there, and again, you're familiar with the San Diego market very well, right? Have you seen other cities, either within California or other places that are leaning towards this model? Like if this is a precedence that San Diego is setting, are other cities kind of following suit?
So far, no. And in
No.
the entire state of California, as far as I know, there's not a single other jurisdiction that's doing this, which I find kind of amazing. I read a statistic that both the city of LA and the city of San Diego, of the residential zoning that's there, roughly 70% of it is single family. So
Yeah.
it's really tough to provide additional housing when so much of it is dedicated to only single family homes, which is why the city of San Diego did this. So as far as I know, there aren't any. Now, all of them have to, of course, provide ADU, but the bonus affordable stuff, I don't know of that at all. I know that in Oregon, they do provide some tax benefits, and I believe you can do, and please don't quote me on this, I think you can do 2 ADUs per lot, so they do allow a little bit more. But to do this thing where the only limitation is the FAR itself, as far as I know, the city of San Diego is the only place in the entire U.S. that's doing it. And I do think that eventually other jurisdictions will follow suit, because I just think that's the way we're going. You know, all of these cities, and it's not just in California, whether it be, I don't know, Seattle, or even, you know, I've talked to some folks that I know who invest in Phoenix. They're saying, oh man, I wish we could do that here. You know, all of these major cities, San Antonio, all of them, you can, you know, Texas, of course, you can spread out, but there are a lot of people that don't want to live out 50 miles away from the city center. And so all of these major cities are all going to need to do more creative or find more creative solutions to the housing problems, because they're all having them. Any top 10 city in the country is having major housing problems.
Yeah, no, I mean, definitely this is definitely a creative solution. Do you see this? I mean, you've done a variety of these now, and you mentioned a couple of options, like a single family home with, you know, turning into 3 units, and then a duplex maybe turning into 10 units. Talk to us about like the returns, right? Because we're, you know, obviously there's construction costs, there's all this, but, you know, there are some savings there, right? Because, you know, you're working with an existing kind of footprint essentially. And so what kind of returns are we seeing from doing something like this versus investing in just simply a duplex or simply a fourplex or something like that for an investor?
Right. Well, I just like to compare it, maybe not so much to duplex or fourplex, but to multifamily in general.
Yeah.
So, you know, of course, in multifamily, one of the common denominators is cap rate. So here in San Diego, in like this central zone, the cap rate still, believe it or not, are sub 5%. So we like to go, when we build, to end up at a 7 cap to cost. So we force in a lot of value, and I try not to be too enthusiastic. I want to under promise and over deliver, but certainly we provide and are seeing much greater than 20% returns on an annual basis. So right now, the fund that we're creating is looking to buy, build, and then sell. There are a lot of investors that are still out, you know, buying these, because even though they're smaller units, you know, this is California. We're talking units that sell $3, $4, $5 million, right? Which in a market like Texas, you could get much larger projects. But at any rate, those are the kind of returns that we're looking at, and I feel confident that we're going to be able to continue to do that. And it's really, as always, you make your money when you buy, not when you sell. But myself being a general contractor, I know how to keep the cost down. As a wholesaler, I know how to get out there and find good deals, creative deals. We're doing things like novations and lease financing and or lease option, purchase. Like this one deal that we have, the seller, it's a lease option, and the seller is going to actually provide the construction funding, because he's a retired engineer, and he's just interested. He's like, I'll provide you the construction financing at 5%. I was like, wow, okay, great, I'll take that. So,
that's fantastic.
So you know, we work to get a good deal from the very beginning, and then of course we're forcing in this appreciation, so that especially right now, I think the most important thing is downside risk. So I'm more interested in talking about the downside risk than I am about talking about, you know, amazing returns, because I know a lot of people are concerned. And so right now, I can look and say, hey, we can make these work like this. And it's actually because of the way the city has basically rolled out the red carpet to this development. Yeah. I can do 80% of my underwriting. This might sound kind of crazy, but I can do about 80% of my underwriting in under 5 minutes on any project.
Wow.
Just because I know what it costs. I know what the city will allow. They have an amazing website where I can go through and see all of what they call their overlays, whether there's anything with geologic concerns, steep hillsides, coastal overlays, zoning. I mean, all of it. Yeah. So I can just go okay, this isn't going to work at all, or hey, I think this might be a good deal, and let's take the next step to earn our due diligence.
So you mentioned it's a buy, build, sell strategy. Are you selling them pre-lease, or are you selling them like full? Like
Stabilized.
what's your
Stabilized.
stabilized, right?
Yeah.
Okay.
Yeah,
Excellent.
leased up and stabilized.
Excellent. Most bang for your buck, right? That's
exactly.
fantastic. That's fantastic. So what's your target for the fund, and how many projects are you looking to execute under the fund?
Yeah. Well, we have a target raise of 10 million over 12 months, and would love to get approximately, it's not a perfect science here, but approximately 10 projects.
10 projects for that. Excellent.
Yeah.
Thank you for sharing that. This is very unique. We haven't really heard this specific aspect before. So, I appreciate all the knowledge that you have specifically on San Diego, but I'm sure that, like you said, I think that if there is enough of a precedence, and if there's other cities that have similar, sort of housing crises, where, they need to increase density, right, in particular areas. This program seems to be a nice template or blueprint for that. So, as we kind of wrap up here, I do want to understand from you, like, as you got started with this, I mean, I assume there was other moments along the way that gave you kind of an inspiration into going into this route. But like, for folks that are listeners, right? Obviously, a lot of interest in some in the backyard apartments. But if somebody is, what's the right mindset? If you look for investors that are buying into this model versus, large multifamily, 300, 400 units, or like a self-storage project, or, single family homes, like what's your pitch, right? In terms of, for this type of project. Obviously, you talked about returns and risks and the balance and things like that. Like, and you might have had an aha moment as you're looking at these things. So talk to us about what that aha moment was, because again, there's so many different avenues that are laid out in front of us on how to invest in real estate. We all know we should be investing in real estate, but there's a lot of confusion, that people may go through because there's so many different ways. So talk to us about why this was like an aha moment for you, and why you went all in on this particular endeavor.
Yeah, well, I actually, one thing I didn't mention was I had grown up myself in a 4-unit, basically the same kind of layout that we're talking about. My dad had a house in Houston. I grew up in Houston, and the upper back portion of the house was a 2-story house, was an apartment, and then he had in the garage he had a lower level, which was converted, and then a unit above the garage, a little studio. And he was through ups and downs at that time, even more probably than today. Houston was really reliant on oil. So through the booms and busts of that oil cycle, that was able to help him, as he had that steady income, and then he was able to retire with that. So
yeah.
I just felt that was really inspirational. So anybody who wants to own them for themselves and live in them, have family members live in them, I just think it makes so much sense. And I also acutely feel the housing crunch that we have here. And so to me, it just kind of all came together. It's yes, you get the returns, and I feel like they're really very positive returns, but also there is this affordable housing element to it, and we need affordable housing here. So it's a little bit of, it sounds kind of cheesy, but doing well while doing good, I guess you could say. So I think all of that comes together for me, and that's why, to really be able to do something that's profitable but also benefits the community.
Yeah, no, I love that, and that's one of the reasons that pulled me away from corporate America and into real estate, because there was an avenue for us to do that. Like, especially in multifamily, where you're doing housing, we tend to partner with folks exactly like with your mindset, that yes, there's money to be made, but there's also good to be done. There's things that we can do that are transformative for our residents, right? The people that are there. And coincidentally, like in Phoenix, our whole portfolio in Phoenix, we have like 3 or 4 properties in Phoenix. We named them Elevate, because we feel like we're coming in, we're buying the property, and we're elevating the standard of living for the residents there. So it's a win for them because we're spending money to improve that property. It's a win for us because they're willing to pay a little bit more, right? So we can increase the rents because we're offering amenities and offering this elevated living.
Yeah.
So it's a win-win, right? And that there's very little opportunities in investing or, kind of business where it's a win-win. You're always trying to, take more from the other side. But here, there is that element of you're doing good. I like what you said, doing good and doing well and doing good at the same time. So yeah, that's definitely a pull for us. And for investors to be able to invest with people that have that similar mindset. So we're not trying to be greedy or squeeze all the juice and be slumlords and things like that. We're actually providing services that are beneficial, as well as providing return for investors, and so both of those can happen simultaneously. They're not mutually exclusive, which I really love. Yeah,
For sure.
So Marcelo, I think we have a lot of folks that are based in California and even in San Diego specifically. So. And I know that there's going to be some interest in kind of learning more about what you're doing and where you're doing it. So tell our listeners a little bit about sort of how they would get in touch with you to learn more, maybe about the fund or kind of see a project kind of firsthand and talk to you directly. And then if there's any resource, you mentioned a guide that you have potentially on your website or something. So if there's any resources you'd like to share, please do so.
Yeah, I would say the best place to start is to just go to the website. It's www.thenextwavegroup.com. And you'll see on there we have a guide, and it's a guide to backyard apartments. And it's actually going to be a living project. And so I will expand on that in the future to probably even provide a course for people that just want to go and do their own stuff. But at any rate, go there. That you can download the guide. There's our contact information there. So I think that's the best way to go, and we can start a conversation for sure. Yeah.
That's great. So that website was the nextwavegroup.com?
Yeah, www.thenextwavegroup.com. Yeah.
Excellent. Well, that's great. So for folks that are looking to learn more about backyard apartments, Marcelo is the person to contact. So Marcelo, I really want to thank you for spending some time with us today and sharing your story and sharing your unique take on these projects specifically in San Diego. So really want to thank you for taking the time to share that with our listeners today.
Yeah, thank you so much. I really appreciate it. And yeah, definitely let's continue the conversation. And like I said, when we get our podcast going, I'll have you come and pay us a visit.
Excellent. That'd be great. And so for our listeners, thank you for tuning in to today's episode of the Spur Your Wealth podcast. Again, I'm your host, Buttam Singh from Spur Equity. Remember that your journey to financial freedom begins with knowledge and action, where knowledge is power, but action is a superpower. So until next time, happy investing.
Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at SpurEquity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@SpurEquity.com. Until next time, happy investing.